lesson by talking about technical analysis, what it actually is, and this will be followed by a live overview of my favorite charting system, how to use a chart. I'll teach you guys how to use various tools on there and how to read a bit of the information that's presented. After that, we'll go deeply into candlesticks to try and understand exactly what they are, how they work, and what they're made of, basically. This will be followed by going back to charts and studying support and resistance levels. And finally, we'll wrap things up by looking at trend lines. Now, after covering all of this material, we will have time for your questions. We'll have this Q&A thing. So if you do have any questions, please try and hold them until that point, just so we can move smoothly, uninterrupted through the webinar itself. And all right, let's go ahead and begin. And our first subject asks the question, what is technical analysis? Well, in its simplest form, technical analysis is the study of markets based on price action. What this means is that we use this type of analysis to study the past values of assets, and we use that information in order to make educated forecasts on the direction the assets are progressing in. Essentially, all of the information that we're looking for and that is relevant to forecasting the movement of a security is already baked into the price. And by analyzing the price action, meaning whether it was up, whether it was down, where it was at. So by analyzing this price action in the recent and more distant past, we can actually apply that knowledge to future trading opportunities. So at the end of the day, we use technical analysis to identify low-risk, high-probability opportunities. Now, in the financial market, there are many different types of charts that we can use for our analysis. We have line charts, we have bar charts, we have OHLC charts, which are open, high, low, close, we have candlestick charts, and many, many more. Now, all these charts have their own advantages and disadvantages, so it's up to you as a trader to find the best fit for you as you progress in your trading career. Now, let's have a look at how to read a chart and use basic tools on a chart. So for this, I'll be going to the website Dania.com. It's my favorite website for doing analysis because it's all very clear. There's a very nice UI, user experience. So let's quickly go to this website. And as you can see, there's nothing too flashy here. It's really just a website that's here for us to do our analysis. It doesn't have to be anything exciting about it. So up here on the navigation bar at the top, hopefully you can see my cursor. So up at the top you have the navigation bar. All the way on the left it starts with home, and all the way on the right you have alert central. So over here, somewhere off to the left, we have the charts tab. So I'll click on that. You can see me very quickly get transported to this page, and there's always a little pop-up. If you need to mess with it, you can just close it. So this is what the chart looks like, and I'm just going to press this icon here to make it full screen so that everybody can see this really well. Now the first things that we can take notice of is the very small writing here that's under the top bar. So all the way on the left it shows us Euro-US dollar. This means that we are currently looking at the Euro-US dollar currency pair. Next to that it's showing us candlestick. So that means to us that we're using a candlestick chart. And over to the right of that, you can see it says 5 minutes. And that means that we're looking at a 5-minute time frame. Now, if you're looking to change the asset you're looking at, you very simply have to go to the very top left. You can see there's a button called Select and Instrument. So when I open it, I'm presented with essentially the most popular assets that people are analyzing. Now, if you're looking for something specific and you don't see it here, there is a search at the top. You can write things into it. You can see BBDFD does not pull anything up. But anyways, the search is very simple. You can just go into stocks and look at the stocks they have here. You can look into futures, indices, forex, whatever floats your boat. It's on this list. Very, very simple. Now, to the right of that, we're also able to choose what type of chart we use. So right now we're on a candlestick chart. But if I click on this icon here, you'll see that we're presented with a number of different charting systems that we can use. So we can use hollow candles, and this is just for people who need to see it differently maybe. You can use HLC, which is high-low close. You can use a bar forest. There's many, many different types of charts that you can use. And again, it really just has to do with your preference, how it works for you. Does it work for your style of trading? Can you understand it well? Can you understand it easily? So, for the purpose of this example, I'll just continue with candlesticks. They are the easiest to see, especially with the screen share because they're very thick. Now, over one more icon to the right, next to the icon that lets us choose the type of chart, we have another icon. And this one allows us to choose a time frame. So right now, we're on a 5-minute time frame. This means that every single one of these candlesticks represents 5 minutes. It took 5 minutes to create that candlestick. If you look here, I'll zoom in a little bit, you can see that this candlestick is currently being created. You can see that because the values are moving, the candlestick body is changing in size. And it takes 5 minutes to complete this candlestick, so you'll see it changing for a little while. And once the 5 minutes are over, it'll basically start up another candlestick. So if we change the time frame to 2 hours, it'll of course change how our chart looks. And now we're evaluating the euro-US dollar, where every candlestick represents 2 hours. Now just to go over a couple other little features, all the way on the right, you have an icon that allows you to change the language. You have French, German, Italian, Norwegian. If you're not a native English speaker and your language is on here, it might be a lot easier to operate it like that. But really, it's not such a big deal. One icon to the left of that allows you to change the theme. So you can kind of change the colors, whatever suits your fancy. Most of these, to me, are a little bit hideous, but I am colorblind, so it's a bit hard to look at. But I usually prefer this one because everything is very, very distinct for me. Okay, I'll change it back to white. And that is it for our introduction to this charting system. Now, let's have a look at candlestick formations. And we will go back to the Netanya chart system in a little bit. So each candlestick, as you can see, contains a high, a low, an open, and a closed value. The blue and red portions are, of course, called the bodies. Now, to better understand how these candlesticks are formed, we can imagine that each one starts out as a line graph, much like this one. Now, if we look at the bottom, we see January, February, March. So we can say that this little graph shows us about 4 months of data. Now, 4 months of data takes a lot of space if you're looking at a chart. So, let's see how this becomes a candlestick. First of all, we can see that we have our open value, we have our closed value, and we have our lowest and highest. Now, as you can see, these values are, of course, spread out over this timeline. But a candlestick shows us all 4 of these values on a single line, on a single flat plane. So here I've drawn out each of these points so that they meet on one point on the same line. We have our highest and lowest, we have our open and close in the middle. I'll just clean it up a bit so we can see it better, and do a little bit of zooming. So again, you can see we have this line here. At the bottom of the line, we have our lowest value. At the top, we have our highest. and in the middle we have the open and close value. So all we really have to do here is to draw in the body of the candlestick between the open and closed values, and that's it. We're left with this one single candlestick that shows us the original data from that line graph. So you have 4 months of data on candlestick. You can see they're very useful. They basically take a ton of data and they put it into a very small form factor, and it allows you to do analysis on a larger scale. Now there's 2 different types of candlestick, as you saw. We have a red one and we have a blue one. And these are referred to as bullish and bearish. So a candlestick is referred to as bullish when the closed value is higher than the open value. And this of course shows us that over whatever time frame, the value of the asset has increased. A candlestick is referred to as bearish when the open value is higher than the closed value. And this shows us that the price has decreased over the time frame. The extension lines at the top and bottom ends of the candlestick bodies are called shadows and are also referred to as wicks or tails. The highest point on the upper shadow is of course the highest value, while the lowest point on the lower shadow is then the lowest value. Now, when there is no shadow at the upper of the candlestick body, it's referred to as a high value. Conversely, when there's no shadow at the lower end of the candlestick body, it is referred to as low value. Now, after learning a little bit how to read a chart and use some of the basic tools there, let's go ahead and learn about market behavior through support and resistance levels.